Okay guys, we're going to go to Ask Scruff. Now this is quite an interesting question and it's for Lee. Little salute to you, my kid. So let's flick this over and pull it in. Okay, so let me just drop that off a second. In the Discord, you come to Traders Clinic and ask Scruff. And you can ask me whatever you want and I'll give my opinion on it. And I come to camera and I just say what it is. So don't think I've ever asked Scruff in here. I don't want to get it wrong. Not my fault. It was the Aussie. It's always the Aussie. Haircut, the amount of mayhem you cause is unbelievable. But we love you to bits, even if we still put the knobby on the head. All right? Nah, you're a good kid. And keep well, because the storm is coming. I watch some of the old veterans of trading, and they seem mostly American, but they keep coming back with the same mindset regarding lot sizes, etc. They don't pay attention to lot size. They work on what they're willing to risk on the trade. So, for example, I hear them saying, I'm going to risk 5 grand on a trade and look to make 5 grand on a trade. Fair enough. Then they work backwards to work out what the lot size is based on their risk and stop. If it's good to go, they never worry about the lot size and they've agreed to the total risk. I would say they deal mainly in day charts and that they have a huge accounts. But could not the same principle be applied to smaller accounts to help with mindset? Well, yes, it's something we discuss on a regular basis. We ask 2 questions, or at least you should be asking 2 questions before you press the button to go. Now, whenever we marking charts out, we go, well, the stop has to be in X place. Not a case of, 20 pips or whatever. It has a dedicated place it has to be. And that's behind a swing point, barriers, whatever your criteria is. Because you can't just go in with a mandatory, I'm just going to do 20 pips. It means nothing to the market. It'll eat it in a heartbeat. The market looks at stress points and their barriers and swing points. So you've got to look at the swing. But it also has to be in relation to what you're wanting out the trade as well. If you're on a smaller time frame, then by definition, your stops are going to be tighter. If you're looking at daily charts, your stops are going to be wider because the swing points will be further away. Now, the next question, or the questions that you ask once you've figured out where that stop is can I afford it? So you'll roughly know where you're going to get in the market, roughly. So I'm getting in at this point and the stop is down wherever you've put it. There's a distance between them. Well, let's just keep the figures easy. Say it's 100 pips away, right? I'm not advocating 100 pips stop because there will be those who don't listen fully. It's an example to make the numbers easy. So if you're on a pound a point based on your account size, because your account size has something to do with it as well, well, that's going to cost you 100 quid. All right. Now, let's just say your account is £1,000 and that gives you that pound, because I work to a mantra of £1 for every 1,000. Why? Stops the account getting blown up and it's an easy maths in my head. Okay. So I can now go, well, is 100 quid worth it against that £1,000? Well, no, it's not. So I have 2 choices. I can't afford that. So I either reduce the position size or I don't take the trade at all. So that's one way of doing it. But then you also need to know where your profit is. Where's it going to get out at? And then you ask another question. Is it worth it? So that's a similar way of doing things. So the mindset is correct. There's just different ways of getting there. I work on pretty much fixed position sizes based on the account size, and then it's capped. And then I work to a daily allowance for what I want out of the trade. But every trade is that similar sort of principle. I'm looking to put X amount into the market to get X out of the market, and it calms my mind down. So it's different ways of doing it, and there's nothing wrong with that. I just can't be chewed with the mathematical gymnastics of trying to work out a position size very quickly on the fly. So I find it dead easy just to go in. Right, stops there. How big is the distance? Well, it's X, right? Can I afford it? No. Well, how do I afford it? Well, I can't move the stop in because the stop has to be in the right place. I half the position size. Half the position size, stop stays the same, and the amount of money that just looks after itself. I hope that kind of makes sense. So, yeah, mindset is a big thing. Big thing. So keep it trucking. We'll discuss this more and more, but lot size and position sizing, it's really down to your comfort level as well. You know, if you've got a small account and you put a big position size on it, it'll wreck it. Absolutely wreck that account. So my theory is trade small and trade accurate. Catch you well soon.